Okay, let's talk money. Today, we are talking about SBLCs. What on earth is an SBLC, you ask? It stands for Standby Letter of Credit. I want you to think of this as a promise. A very serious, legally binding promise. This promise is made by a bank. It is there to provide security and financial backing. It gives you and your business partners crucial peace of mind. Got it? Good. Why are these SBLCs so important in the world of finance and trade? Well, business, especially big business, thrives on trust. When you are dealing with new partners or partners far away, trust can be scarce. An SBLC helps build that essential bridge of trust. It is like a firm, confident financial handshake between parties. It clearly says, this deal is secure, this payment is guaranteed. This makes people feel safer. And when people feel safer, money and goods can move more smoothly. Now you have to understand this. An SBLC is not your first line of payment. It is not like writing a check or using your debit card for a direct transaction. No. It stands by. Just like its name says. It patiently waits in the background, ready to act. It only springs into action if there is a problem. It only gets used if one party in the agreement fails to meet their obligations, like not paying for goods received. Then and only then, the SBLC steps in. It is your ultimate financial backup plan. Let's paint a picture. Imagine you are a seller, a smart entrepreneur. You are about to ship a large order of valuable goods. Perhaps these goods are going to a buyer overseas, someone you have never met. You absolutely want to be sure you will get paid for your hard work and your products. Of course you do. An SBLC obtained by your buyer gives you exactly that assurance. It is your financial security blanket. It is the reassurance you need to conduct business confidently. You can sleep much better at night knowing it's there. So, how does this SBLC actually work in practice? Let's break it down. The process typically starts with the buyer of goods or services. In SBLC language, this buyer is called the applicant. The applicant understands they need to provide a guarantee to the seller. So they go to their own bank, which we call the issuing bank. They formally apply for the standby letter of credit. This SBLC will be in favor of the seller, who is known as the beneficiary. Are you following me so far? It's important you do. The issuing bank doesn't just hand out SBLCs like candy. Oh no. They have a serious role to play. The bank will conduct a thorough check on the applicant, the buyer. They will assess the buyer's creditworthiness. Can the buyer actually afford this commitment? Do they have a good financial track record? This due diligence is absolutely vital for the bank. If the bank is satisfied with the buyer's financial standing and the underlying transaction, it will approve the application. Then it officially issues the SBLC, often sending it to the seller's bank, known as the advising bank. Now, what happens if things go south? What if the buyer, the applicant, fails to uphold their end of the bargain? For example, what if they receive the goods but do not pay the seller as agreed in the contract? This is where the SBLC shows its true power for the seller. The seller, our beneficiary, is protected. They would then gather specific documents as stipulated in the SBLC. These documents serve as a proof of the buyer's default. The seller presents these to their bank. Honesty and accuracy in documentation are absolutely key here. Once the seller presents the required documents proving default, their bank, the advising bank, or another nominated bank, will carefully examine them. They check if these documents comply strictly with the terms and conditions of the SBLC. If everything is in order, these documents are forwarded to the issuing bank, the buyer's bank. The issuing bank performs its own check. If the claim is valid, the issuing bank is obligated to make the payment to the seller. The SBLC has fulfilled its promise. The seller gets paid, even though the buyer defaulted. Justice. Standby. Letters of credit are, without a doubt, powerful financial bodyguards. I want you to really understand that. Their primary function is to act as a guarantee of payment. Yes, a solid guarantee. This means the beneficiary, usually the seller, is assured they will receive their money. This assurance holds true even if the applicant, the buyer, fails to meet their contractual payment obligations. This is incredibly important. It is particularly vital for large-scale projects or high-value international trade deals where the financial risks can be substantial. It just reduces so much potential heartache. Think about it with a real-world scenario. Imagine you are undertaking a massive construction project. You're building a new, state-of-the-art factory, perhaps. For this project, you need highly specialized materials or equipment. You have to source these from a new supplier, maybe one located in a different country. That supplier might be understandably nervous about extending credit to you, especially if it's a new relationship. Rightfully so. An SBLC issued by your reputable bank can calm those nerves significantly. It essentially tells the supplier, we, the bank, stand behind this company's commitment to pay. Now let's touch upon a more advanced topic, monetizing an SBLC. This term sounds fancy, doesn't it? Monetizing an SBLC generally means using the SBLC as a form of collateral. The beneficiary might try to use it to secure a loan or some form of credit from a financial institution. The SBLC, being a strong bank promise, can give a lender comfort. But listen to me very, very carefully here. This is not simple. It is certainly not free money just waiting to be grabbed. You must exercise extreme caution and seek professional advice. And this brings me to a huge warning. A really big one. You will hear people, often on the internet, talking about leasing SBLCs. Or they might whisper about buying SBLCs at a deep discount for quick, easy profit. This is almost always, and I mean almost always, a scam. A big, costly, heartbreaking scam. Please be aware. Genuine SBLCs are tied to real underlying commercial transactions or performance obligations. They are not designed to be standalone tradable instruments for speculative purposes. Always deal with your trusted, reputable bank. Don't get fooled. In the vast world of international trade, SBLCs are not just helpful, they are often vital. Why is that? Well, when businesses operate across borders, distances are significant. You are dealing with different legal systems, different commercial practices, and sometimes different languages and cultures. In such an environment, establishing trust between a buyer and a seller can be a major challenge. An SBLC acts as a crucial financial bridge. It spans that gap of uncertainty and helps build the necessary trust. It allows global commerce to flow more freely and securely, making those big international deals possible. Let me give you another example. Imagine your company manufactures and exports very expensive, custom-built machinery. These are high-value items. You absolutely must have assurance of payment before that machinery even leaves your factory floor, or certainly before it reaches a distant port. An SBLC, provided by the international buyer and issued by their bank, gives you precisely that assurance. It significantly reduces your risk of non-payment. This allows your business to engage in global trade with greater confidence. You can expand your markets without losing sleep over payment security. That is smart business. Now you might be wondering, are there specific rules for these important financial tools? Yes, absolutely there are. This isn't the Wild West. The International Chamber of Commerce, ICC, a global organization, plays a key role here. The ICC publishes and maintains sets of rules that govern instruments like SBLCs. Two widely recognized sets of rules are the Uniform Rules for Demand Guarantees, URDG 758, and the International Standby Practices, ISP 98. These rules provide a standardized, predictable framework. Banks all around the world adhere to these rules, ensuring everyone is on the same page. So let's wrap this up with some key takeaways. My final smart words for you. Standby. Letters of credit are strong bank-issued guarantees. They are promises to pay. Their main job is to protect sellers or beneficiaries if buyers or applicants fail to meet their obligations. They are absolutely crucial for facilitating secure domestic and especially international trade. Always, and I mean always, conduct SBLC transactions through well-known, reputable banks. Understand that SBLCs are serious financial instruments tied to real obligations, not get-rich-quick schemes. Be smart with your business. Be secure with your money. Approved.